Hi, this is Peter from Game of Trades. This is going to be a very important episode. I hope you're listening carefully because we're going to dig deep into the S&P 500 today. Take a look at some of the big stocks and what they're doing and how that's going to impact the markets, and also how we're going to be able to profit from that, because after all, that is our objective here. If you're new to the channel, make sure to subscribe. We post multiple videos a week on the stock market, on opportunities in trading, investing, you name it. Now, without further ado, let's get right into it. So we're going to start off with a quick overview of the S&P 500. Take a look at the broad technical picture. What's the structure? That's very important to do when you're going to take a look at a particular sector or stock. You need to know what your trading bias is. Is the chart pointing up? Is the chart pointing down? So that's exactly what we're going to discuss right now. We still have a big bullish structure on the S&P 500. We had that big rally from that false breakdown here, and we've been consolidating the gains. So this is a bullish setup. We have a beautiful rally here, consolidation, and we could break out and have another rally, hit our fourth target on the trade from GameOfTrades.net at 3,897. So we still have that bullish bias on the S&P 500 right now. In the short term, we can take a look at the MACD. We're still on bullish momentum. We had that crossover, that blue line crossing above the orange one. You can see when we do have that type of signal, like here, like here, like here, it does tend to end with a nice rally. So that's something we could still see in the next few days. If the S&P 500 holds that support, we could see another move up to hit our fourth target on our trade. Now, that does not mean this is a buying opportunity. Not at all. The market is still overextended, right? We haven't had a proper correction since around October, right? So this is an overextended market. It still has room to run, but this is definitely not a beautiful buying opportunity. Right now, we're just holding our positions and booking profits along the way. And that's why the trade ideas on GameOfTrades.net have been a little bit light recently, because we haven't had big new entry opportunities on the S&P 500. So back here, we were entering Apple, we were entering Tesla, PayPal, and those ended up being really nice trades. Right now, not so much. We're taking a step back a little bit, but we are still looking for long opportunities if we have some type of a pullback, maybe after this rally. And I'm going to show you exactly why. I'm going to take a look at a longer term chart of SPX just to remind you guys exactly what we're looking at. We always keep the chart very simple, especially long term. We're looking at this trend line. We had a recent big breakout here, which is a big deal. Every time it used to test that trend line, you had a big rejection, rejection. And now it broke out and we're above that resistance. And what happens to resistance once it's broken? It becomes support. So this is our safety net right here. And this is why we're short-term bullish on the S&P 500. Even if the fundamentals don't align, even if it's overvalued, overleveraged, you name it, we're trading the chart that's in front of us. So we're still long. Now, from an investment standpoint, that's a completely different story. You guys know that we're not big fans of the stock market in terms of investments. We don't want to be putting our capital in an overvalued market, even if it still has the potential to go higher. So if you're interested in knowing more about our investment strategies, you can go and check out our website at GameOfTrades.net. We primarily focus on opportunities outside the US stock market. So we're looking at gold, silver, we're looking at commodities, emerging markets, of course, cryptocurrencies. We are all over that. So if you're interested in all that, make sure to go check that out. But now in terms of trading, so back to that chart of the S&P 500, our trading strategy revolves around trading the chart that's in front of us. So we have a major line of support. That's the line I just showed you under us. So we're going to focus on long trades as long as we have that net under us. If we see a big breakdown, we'll get stopped out and we'll be looking for shorting opportunities here. But that's not our current situation. Trade the chart that's in front of you. And so right now, what we're closely looking at are the FAANG stocks, because they're telling us a lot of things about the markets right now, and they could also turn out to be big opportunities. So we're going to start off by taking a look at Amazon. So obviously, this stock needs absolutely no introduction. It has been a primary driving force behind the bull market going from 2009 all the way to 2020. This stock, along with the other FAANG stocks, have been a big driving force behind the market. So you can say that they've been pulling the markets up higher over the past few years. Now, something that's very interesting and that's happening right now, we've had those parabolic gains in 2020, and now we're seeing Amazon and the other FAANG stocks I'm going to show you in just a second that are consolidating here in big patterns that actually seem to be breaking down right now. So they're really starting to underperform the market for the first time in quite a while. And I'm going to show you exactly what I mean. We're going to put the Nasdaq on top here. Since around July right here, where we're starting this chart, we've seen the Nasdaq outperform Amazon, right? Amazon has been the biggest driver for the Nasdaq, and now it's underperforming. So what does that all mean? Does that mean that the big driving force behind the market is now dead and that we're looking for more downside? We're going to discuss that exactly. So we're going to take a look at Amazon divided by the Nasdaq, and that's going to give us a ratio between Amazon and the Nasdaq 100, telling us if Amazon is outperforming or underperforming, and we can compare that to history. So you can see this is a daily chart of that ratio, and you can see since July, so that's exactly what I showed you, we've been underperforming Amazon versus the Nasdaq. So we've taken a look at this chart, and this is actually a normal phenomenon on Amazon. You do tend to see these periods where it underperforms, and then you get a big breakout, and that's when Amazon makes its big rally. So we've seen that throughout the bull market, periods where it underperforms, and they are usually big buying opportunities. So that's something we're looking at on Amazon. That's the first thing we're looking at for a breakout, right? We have a bullish bias on the stock market. So if we see a big breakout on this ratio, that could be a beautiful buying opportunity, and it would be a really nice trade idea for the site. So if you're a member or a future member, make sure to tune in for that, because we will be all over that again if that happens. And that's what I wanted to move on to. If that happens, right? What if it doesn't happen? What if we never see that breakout and we just see Amazon continue underperforming? Is that something we've seen in the past? We're going to take a look at a longer term time frame on Amazon and see what this type of underperformance would mean, right? What if it all continues? What if Amazon breaks down below its consolidation pattern and starts to head down? What if that happens? What would that mean for the stock market? And I'm going to show you this period right here. So the dot-com bubble back in 1999, you can see where Amazon topped during its outperformance. You can see it was a major outperformer throughout the dot-com bubble. So already back then, the Nasdaq was making huge gains back in 97, 98, 99. But Amazon was actually outperforming the Nasdaq. And it topped back around March 1999 and then started to heavily underperform the Nasdaq. So where do you think the Nasdaq topped? Did it top at the same time as Amazon? No, absolutely not. We're going to put the Nasdaq on top so that you can compare exactly where the dot-com bubble topped. So that orange line is the Nasdaq 100 throughout the dot-com bubble, and you can see it topped right here, March 2000. So a year later. And between that time, you had Amazon significantly underperform. So you can see sometimes it's a buy opportunity, but sometimes it's a warning signal telling you that the bubble is almost ready to pop. Now, this is by no means an emergency. This is just an observation. You can see between that time and the Nasdaq top, it was a year of trading. So these things can take a while, but if we continue seeing this underperformance, as I said, throughout the next few months, that could be a warning signal. If we don't see Amazon start to pick up some speed and it continues to underperform, that could be a big warning signal that we're no longer in this growth bubble and that we're just in the final speculative stages of that bubble where it already lost its biggest driving factors. These are not predictions, just observations. We're going to have to see what happens. If we get a breakout, we'll be buying. If we don't, we'll be very skeptical of this market that's going up without the FAANG stocks. Now that's where I want to move on to Microsoft. Also a beautiful chart. So on the daily chart, very similar. Big gains in 2020 and then this massive period of consolidation here. And it's pretty weak. It's breaking down below its trend line here. Very similar to Amazon. So what does that ratio say? Microsoft divided by the Nasdaq 100. And again, very similar right? 2020, we've had an outperformance since around 2014, 2015, and now suddenly it topped and it's starting to underperform. This can reverse, and that would be a beautiful buying opportunity for Microsoft. But if it continues down, that would look similar to, again, the dot-com bubble, where you had the outperformance top in March 99, very similar to Amazon. And then you can see what happened to the Nasdaq. I'm going to overlay it. You can see where the Nasdaq topped right there, March 2000. So again, a year of underperformance of Microsoft right here led to the top of the dot-com bubble. This is by no means a prediction. All we're doing right here is observing the fact that we're seeing this relative underperformance, and we're trying to analyze what it could mean. And the conclusion to that is that it's either a big buying opportunity for that stock when it breaks out, or it means we've lost the big FAANG stocks that have been pushing the markets up for around 10-15 years. Only time will tell which one it is. We're going to be continuing to make updates on those stocks. Again, if you're still watching, make sure to go check out our website at gameoftrades.net. We post multiple articles a week on trading, various opportunities in trading, investing. And I believe today we're going to be posting another big article on Bitcoin as it's currently correcting in price right now, a potential opportunity to position back into Bitcoin and the fundamental case behind Bitcoin over the next few years, not just looking at 1 year, but looking out multiple years ahead. So that's about all I wanted to cover in this video. If you enjoyed, make sure to drop a like and subscribe to the channel if you haven't already. In the meantime, good luck on your trading and see you next time. Now listen up, if you're already investing in cryptocurrencies, why aren't you investing in tax-free crypto? ITrustCapital is the only provider that allows you to invest in crypto assets within your retirement account. They allow you to not only buy Bitcoin, buy Ethereum, and others. They even have Chainlink coming soon. It's designed for beginners and experts alike. They give you 24/7 trading access and even have built-in institutional grade secure storage. You don't need to worry about creating private keys. If you open an ITrustCapital Roth IRA, it allows you to buy Bitcoin now, and when the asset grows over the next few years, you keep all the profits for yourself with no taxes. If you want to learn more, head to itrustcapital.com and you can request your free insider's guide now. This will teach you all about crypto retirement accounts and how you can invest tax-free.